Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. In a roller coaster trading session overnight, the Australian dollar bulls once again throw in the towel and take the exit door rather sharply after the intraday high of 66.12 sharply turned around, and then from there the market plummeted to a low of 64.61. As a slightly firmer US dollar comes back into play, the technical outlook still remains bearish, and I still look towards a lower region of 64 cents, with the broader picture holding to 60 cents. With the technical implications remaining bearish, upside attempts should fail now towards a level of around 65.55 to 65. The euro also, after marking its territory around 10.15 to the bear case, is that the market plummeted and now looks towards the level of 112.75. We've still got a lot of work to do after these 2.5 day rally. We've still got to clear this level on the downside of 112 figure. If so, then that would give a stronger case back towards the bottom side of the range around 110 and reassess from there. The dollar-yen case has strengthened further, but still has to tackle this level that's seen around 105.15, but may stretch to 35 due to this candle here. But nevertheless, from a technical point, I still feel the market will be bearish in terms of the fact that risk scenario will remain to safe haven assets. The sterling plummeted overnight, and as you can see, the market plummeted even further to the downside. With the support now crushed at 129, does give further scope towards the level of 128.15.25. A stronger case has come through to the pound, and also when we look also to the euro sterling cross to the upside, which could see further gains also due to the weakness coming back into sterling. Canada, I still have to hold off from any view at the moment after the market is still holding to a potential neutral stance. However, with oil just breaking over the level of $35 a barrel, could see a pullback and therefore eventually fill this gap, which could see a tumble back towards the 134 region, which is looking a little bit more conclusive in terms of how this play of the candle is. The break of the support overnight at 56.58 actually saw further risk to the downside and reached its target of 40 to 42. From the rebound of 1,640.42, the market is now looking back to the top side, and a break above 58.60 would suggest that this short-term pullback was initially a case to a bear trap, because the market's responded in quite a positive way. So above 60 looks towards 68 to maybe 88. Finishing up with oil, the market, as I mentioned, is just getting above the level of 35. We need to see a close of New York, so there's still some hours to go yet, and still a lot of work to do. But nevertheless, from the break, could give further scope now to $38 to maybe back to 41 and filling this gap. Well, that's a wrap for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new day.